I'll just play it relatively safe, and I'm not going to give you a 5,000-10,000 call. I'm just going to say 3,000 was my call a few months ago, and now the fact that we had a correction makes it a return even quite decent next year if we can make it back to 3,000. But the fact that investors continue to buy gold, the reasons behind that I see have not gone away, and they will probably continue to be key drivers. And then they all just unfortunately boil down to the fact that we are living in an uncertain world, and these uncertainties they add increased demand for alternatives. And
gold has emerged as the star performer of 2024, achieving multiple record highs and trading above $2,650 per ounce, a remarkable year-to-date gain exceeding 28%. Analysts suggest this stellar rally may be just the beginning, with forecasts pointing to prices potentially surpassing $3,000 in 2025. Key drivers include heightened economic uncertainty, persistent geopolitical tensions, and ongoing de-dollarization trends, all fueling demand for safe haven assets like gold. The metal's robust momentum reflects its growing role as a critical hedge in an increasingly volatile global financial landscape. Ole Hansen, head of commodity strategy at Saxo Bank, has unveiled Saxo's bold, outrageous predictions for 2025, which include the US dollar experiencing a dramatic decline and the dissolution of OPEC. Hansen has labeled 2024 as the year of the metals, particularly for investment metals like gold. Revisiting his previous $3,000 price target, Hansen remarked that following the recent correction, gold appears well-positioned to return to that level next year. However, he remains cautious and avoids making extreme predictions, such as gold soaring to $5,000 or $10,000. Gold's recent surge, marking a 28% year-to-date increase, underscores its position as a favored safe haven asset amid ongoing geopolitical and macroeconomic uncertainties. Notably, the average price of gold reached record highs multiple times this year, exceeding $2,700 by October. Although prices have slightly retreated from those peaks, they remain significantly higher than in most periods of recent years, highlighting the enduring strength of gold in uncertain times. Ole Hansen highlighted the remarkable resilience of gold, noting that December has delivered positive returns for 7 consecutive years. Last year, for instance, gold posted a modest gain of 1.3%. While Hansen's earlier predictions of a weaker dollar and earlier rate cuts did not materialize, gold still performed strongly, driven by heightened global uncertainties. Despite these challenges, Hansen remains cautiously optimistic about gold's sustained upward trajectory. Let's delve into the video to gain further insights. Before we begin, consider subscribing to the channel and hitting the bell icon to stay updated with the latest content.
Well, gold is, as we all know, is negatively correlated to the dollar. So if we do get a big drop in the dollar, and also a drop simply on the fact that it's no longer viewed as a safe haven, as much as a safe haven as it has been, then obviously investors will look elsewhere for havens, and that's where the crypto and gold comes into the equation, and that basically means that if we see this big drop in the dollar, then there will be strong demand coming into both, and what categorizes both of these markets is a scarcity of supply, and that's really in essence what continues to drive prices higher for these two products. It is obviously quite amazing that we now for 7 years in a row have had a positive December. Last year we just scraped through. I think we rose something like 1.3%. So it was a touch and go, but nevertheless, so there will be some focus on that. I think why not? Because again, ultimately, we've had a correction in gold, which was long overdue. We've seen some of the speculative froth come out of the market. At the same time, we've also seen the market actually being quite resilient. The correction from a technical perspective has not been that deep. We corrected half of the run-up we had for between September and the peak in early November, and a major correction. So I think that it's also played for, and I think ultimately we have to consider what is it that makes an investor want to buy a dead relic that pays you absolutely nothing. It actually costs you money to hold, because the alternative was buying a bond that could give you some interest rate. You maybe have to pay for insurance and storage for 2024, and I called mine the year of the metals. That luckily came through, especially obviously for the investment metals. I will have to admit that part of the way it was not for the reason that I actually set out, because I was looking for weaker dollar and yield rate cuts to start much sooner that didn't happen, but gold nevertheless moved higher, and that was driven by the uncertainty elsewhere that added that saw investors come in. So having been forced to raise my target 3 times in a year, I'll just play it relatively safe, and I'm not going to give you a 5,000-10,000 call. I'm just going to say 3,000 was my call a few months ago, and now the fact that we had a correction makes it a return even quite decent next year if we can make it back to 3,000.
The US dollar is poised for its most significant weekly decline in a year, marking a sharp reversal from the rally fueled by expectations that Donald Trump's policies would strengthen the currency. The dollar has experienced a notable drop, falling 20% against major global currencies and an even steeper 30% relative to gold, highlighting gold's resilience as a preferred safe haven asset amid shifting economic and policy landscapes. Ole Hansen believes that as the year begins, the US dollar is likely to remain dominant due to its status as the go-to asset during times of uncertainty. However, looking ahead, he suggested that while the dollar may maintain its strength in the early months, it could face challenges as the year progresses. According to Hansen, this evolving economic environment could significantly increase gold's appeal as a safe haven asset if the dollar weakens and uncertainties persist. Let's now turn our attention to the video again.
The fact that we have seen a sharp slowdown in expectations for rate cuts in the US, we've gone from expecting 10 further cuts back in September after the first 50 basis point cut to now around 3 cuts. That has obviously driven up yields, and that's at a time where other central banks around the world are cutting rates. The exception obviously is the yen, which has helped the yen strengthen. But this is basically adding some support to relative support to gold on an interest rate differential basis, and that's why as we start the year, the dollar is probably going to be in the driving seat, simply because it's still the go-to market when there's uncertainty, and we will see plenty of uncertainty as we approach January 20th with the inauguration of President Trump, and we get a clearer picture of what's going to happen next. So with that in mind, the beginning of the year potentially could be one slightly challenging from the strength of the dollar, but then we'll have to look at how economic data starts to come in, because they have shown strength recently. If there is any sign of weakness, that obviously does give the Federal Reserve the chance or the opportunity to cut rates at a faster pace than what we've seen so far, and then that could start to weaken the dollar. So Trump likes the strong dollar, but at the same time, I'm sure he doesn't like a dollar that is too strong. And if we start to approach parity in Europe, that would be something that most certainly whether we would take note. And that's not just simply because the dollar is strong; it's also because in Europe, where I'm sitting right now, we're struggling on several fronts. We're heading into a winter where gas prices potentially could be quite a bit higher than we like. We have a political situation in France, which is pretty diabolical. And we got a German industry on its knees. So the euro is weak, but it's getting to the point potentially where the weak euro could, to a certain extent, help alleviate some of those pains. But long answer to a question. But I think at the start of the year we'll probably see a continuation of this dollar strength. But as we move deeper into the year, I'm not so sure that it can actually be maintained. And I could see some weakness start to emerge as these policies are rolled out, and it potentially have a negative.
There is no doubt that gold is set to close in 2024 with one of its best yearly performances in recent history. As the financial world looks ahead to a new president and the Federal Reserve's final meeting of the year, investors and analysts are closely analyzing economic indicators and potential policy shifts. Throughout this period, the gold market continues to serve as a vital barometer of global economic sentiment, with its price movements offering valuable insights into broader financial trends and investor confidence. Given the current economic uncertainties, how do you see gold's role evolving as a safe haven asset in 2025? Share your feedback in the comments below. If you found this video useful, hit the thumbs up and subscribe to keep up with our latest updates. We appreciate you being a part of this journey.